By the end of the course, participants will be able to apply Newton's law of motion as a metaphor for market movements and understand how external forces such as news events, geopolitical tensions, or policy changes act as catalysts for price changes. Participants will learn to distinguish between fundamental analysis, which focuses on external economic and financial factors to assess intrinsic value, and technical analysis, which uses historical price movements and patterns to predict future price behavior. Participants will understand how to perform fundamental analysis on various asset types such as stocks, bonds, commodities, forex, and cryptocurrencies, recognizing the specific data points required for each. Financial markets, much like the physical world, operate on principles of cause and effect, action and reaction. Newton's first law of motion states that an object at rest stays at rest, and an object in motion stays in motion unless acted upon by an external force. This means a ball lying on the ground will remain stationary until something, such as a person, comes along and kicks it. Conversely, a ball rolling down a hill will continue to roll until it encounters a force strong enough to stop it, like hitting an obstacle. In financial markets, prices exhibit the same phenomenon of cause and effect. For instance, the stock price of a mining company may remain flat for years, only to suddenly spike on news of a new mine discovery. Similarly, the price of oil could be on the rise due to turmoil in the Middle East, only to level off when reports of a ceasefire emerge. Likewise, the dollar index may sharply drop if traders begin circulating reports of an aggressive easing policy by the central bank. These examples demonstrate how external forces, such as news events, geopolitical tensions, or policy changes, can act as catalysts, causing sudden shifts in market prices. When analyzing financial markets, traders and investors typically use two main approaches: fundamental analysis and technical analysis. Fundamental analysis focuses on examining both qualitative factors, such as management effectiveness and industry conditions, and quantitative factors, like financial statements and economic indicators, that affect the value of an asset. The goal is to assess an asset's intrinsic value by evaluating external elements that influence its price, such as company performance, macroeconomic trends, and global events. Technical analysis, on the other hand, is the study of price movements and patterns in financial markets. It operates on the assumption that all relevant information about an asset is already reflected in its price. By analyzing past market data, primarily price, volume, and chart patterns, technical analysts aim to predict future price movements. This approach typically involves the use of charts, patterns, and various technical indicators, such as moving averages, support and resistance levels, and oscillators. Of the two approaches, many traders prefer technical analysis because it can be applied to virtually all types of financial assets, including stocks, forex, commodities, and cryptocurrencies. Fundamental analysis, while useful, often requires different data points for different asset classes. That is, earnings reports for stocks, GDP growth for currencies, making it more specialized depending on the asset being analyzed. Fundamental analysis relies on specific data points depending on the type of asset being analyzed, aiming to determine the intrinsic value of the asset based on economic and financial factors. When analyzing stocks, fundamental analysts examine financial statements, such as income statement, balance sheet, cash flow statement, and key financial ratios such as price to earnings, earnings per share, and dividend yields. Additional factors include the company's management, competitive position, and industry trends. For bonds, key data points include interest rates, credit ratings, and the issuer's ability to repay debt. Analysts also monitor macroeconomic indicators like inflation and central bank monetary policy, which influence bond yields and prices. In the commodities market, fundamental analysis focuses on supply-demand dynamics, weather conditions for agricultural commodities, and geopolitical factors that affect availability and pricing. In the foreign exchange market, Analysts examine macroeconomic indicators such as GDP growth, interest rates, inflation, and trade balances, which can influence the strength of a currency relative to others. Cryptocurrencies are newer assets, and fundamental analysis looks at factors such as network activity, developer involvement, tokenomics, that is supply and inflation rates, and the technology's use case. Other important metrics include market cap, liquidity, governance model, and the degree of decentralization. Each asset class has a unique set of factors influencing its valuation. That is why the data points used in fundamental analysis vary by asset type. In contrast to fundamental analysis, technical analysis focuses solely on price movements and trading volume, and its methods are consistent across all asset classes. Whether you're analyzing stocks, forex, bonds, commodities, or cryptocurrencies, the tools and techniques of technical analysis remain the same. Technical analysts use price charts, such as candlestick, line, or bar charts, and technical indicators like moving averages, Bollinger Bands, Relative Strength Index, or RSI, and MACD to identify trends and patterns. These tools are applicable across all financial assets. Unlike fundamental analysis, which evaluates external factors, technical analysis assumes that all relevant information is already reflected in the asset's price. The focus is on past price action to predict future movements, making the approach consistent across different markets. Thank you for watching. You've taken the first step in your journey toward understanding how to analyze financial markets. Always remember, fundamental analysis focuses on identifying external factors that influence prices, while technical analysis is the study of price movements themselves. Be sure to test your understanding of the topic by taking the quiz before moving on.